Watch out, XRP could be about to make a move that only happens once every few market rounds. The kind you don't try to catch. The kind that you either already set yourself up for or end up watching from the sides and wondering how you missed something that was right there in front of you the whole time. This is infrastructure that is slowly coming together while most people are still fighting about news stories from years ago. Let's begin. It's almost 1 a.m. in Dubai. The city is busy. The air conditioning isn't working to keep the heat down. And I have an unfinished coffee on my desk because I can't stop updating one screen, the monitor for CME. That's not something I say without reason. When futures markets light up before price does, that's usually a sign. Volume for CME's brand new XRP futures contract just went through another spike. This time it doesn't seem random. Instead, it feels like the first domino has fallen. This movie is one I've seen before. This is what Bitcoin and Ethereum did. Futures come in quietly, institutions look around carefully, volume grows slowly, and then one day the question is, how big? It's not a loud knock. Deja vu comes in through the side door. By the time anyone sees, the position has already been set. A quick note before we go any further for people who are trying to follow sets like this without getting lost in the noise. That's the point of XRP Insiders Elite. The link is in the note below that has been pinned. It's a premium set of clear documents, images, and videos that focus on what counts, how big players usually align themselves, and how these patterns have played out in the past. Let's go ahead. Anyone who has watched this channel for more than 2 double espressos knows that I have never lied about XRP's past. The crypto soap play has been going on for years. There are lawsuits, governmental drama, never-ending Twitter arguments, and that one family member who always asks, didn't the SEC kill that coin already? XRP has been in the shadows longer than almost every other big asset in this space. That's why what's going on now is so important. As I watch the first CME trades close, 50,000 XRP blocks clear one after the other without any problems, I feel like someone has just found a way for institutional investors to cheat. On the first day, the notional amount was about $19 million. On the second day, they added another $10 million. About 1880 contracts were sold in the first week, worth a total of $35 million. Yes, I can hear the doubters getting more excited. Bitcoin is much more valuable than that, yes. If you don't care at all about the fact that this market didn't exist before Monday, institutions don't run fast. They don't go in, they look into it, they check, they move on purpose. This very moment, XRP is being quietly led into places it hasn't been before. Most people don't pay attention to this fact, but Wall Street does. CME came out with more than one XRP futures product. They fired off 2. There is a micro contract that costs 2,500 XRP and a standard contract that costs 50,000 XRP. That's not a mistake. That's called accessibility by design. And there's a seat at the table, CME says, whether you're an intern at a hedge fund, dipping your toe in, or a pension fund, giving a lot of money. These deals are paid in cash, they are based on a daily rate of exchange, and most importantly, they are controlled. One word can change everything. Compliance departments take it easy when officials give their okay. Liquidity shows up when compliance eases up. The old reason that XRP is too dangerous from a regulatory point of view starts to sound old-fashioned. Take a quick look at Washington, D.C., because this is where the tone really changes. Imagine switching out the SEC chair like a League of Legends team changes its top laner in the middle of the season. Just one move changes the way you play. Here comes Paul Atkins. He was approved last month after President Trump tapped him faster than most people can skip YouTube ads. Atkins does not believe in crypto maximalism. He's not firing shots at meetings. While Gary Gensler is DJing, he might as well be DJing in a laser suit. He's already holding roundtables with top executives in his first week on the job. He is said to have more than 70 crypto ETF applications on his desk right now, including several bids for a spot XRP ETF. Official decisions are said to be put off until June, but the mood changed overnight. It went from maybe someday to maybe this year. And before anyone says it, talk about ETFs doesn't matter until the Ripple case is over. I have yelled that exact line into space for more than a year, but here's the catch. The endgame is finally here. The SEC and Ripple are working hard to come up with new deal terms so Judge Torres can sign off and move on. Once the judge strikes, compliance teams at asset management firms will not talk about it again for months. They are going to file. Not easy. Think of BlackRock, stick to it. Tree of Wisdom, not talking at all. Just quietly getting ready as if it were the launch of the iPhone. That's how institutions really move when the way is clear. And the rest of the world isn't waiting while the US talks. Brazil for everyone. This is the first spot XRP ETF in the world. It was released on the B3 market. As soon as it went live, it started getting requests from institutions, access to pensions, limits on exposure. Not a story. Before the SEC finishes their morning coffee, if another big country builds an XRP on-ramp, you can bet that American institutions will be aware. Then there's the shock from the Oval Office. Trump signed an order earlier this year that set up a strategic Bitcoin store and a larger U.S. stockpile of digital assets. This release had some text in it that seemed like an afterthought. It talked about looking into other high-velocity settlement assets. Translated, these are assets that are made to quickly move large amounts of value across countries. XRP is a clear part of that conversation. Really think about what that means. This isn't just marketing guesswork. This is the plumbing of geopolitics. A digital form of the strategic fuel reserve. It's not just bullish if the U.S. government says it might hold XRP as part of a larger funding plan. It changes everything. Now let's talk about the macro background, which is often used as a red flag by doubters. Yes, but the world's policies are a mess. True, there are wars, bans, and doubt, but the tide is changing even here. There may be peace talks between Russia and Ukraine now instead of never. Reports say that draft models are being thought about. Capital doesn't just sit around if global risk goes down even a little, it goes. When it does, it looks for assets that were made to make moving money across countries easy. That's what XRP does best. This is what most people miss. XRP isn't trying to be the best joke. It is not trying to get attention on crypto Twitter. It's setting itself up as infrastructure. This is the kind of product that doesn't care about day-to-day changes because its value comes from how it's used, not how it makes people feel. Remember that friend who bought Apple stock when the first iPod came out and then forgot about it? They did this not because they were great traders, but because they knew the product was important. XRP makes me think of that time. The rails have been around for a long time. Wall Street is finally paying attention, which is something new. Futures make money available. ETFs are supported by liquidity. ETFs let you get your retirement money. Demand from retirement funds is slow and steady, and it doesn't change much during the day. That's how things get older. Now is when the order starts to matter. The XRP domino effect was explained by an expert named J4B1. Listing of futures, acceptance of spot ETFs, adoption by institutions, and real price discovery. It's not just a guess. There is a pattern. The same one that Ethereum and Bitcoin did. Money from banks is like a tanker ship. It takes a long time to turn, but when it does, it changes the shape of the ocean for all the smaller boats that are nearby. Let's get back to Earth now. There are risks here. The volume might stop. Regulators might take a long time to act. The deal could be lost by Ripple at the 1-yard line. Over 1,180 contracts is not a huge wave. Take a test sip. Scale is what everyone wants to see, but that's exactly why there are micro contracts. They let careful players try out exposure without putting up a lot of money before putting food on a plate. No one does that. One more important fact that most people don't see is this one. The CME reference rate takes the average of the prices of XRP on different platforms every day at 50 new UTC. Having that standard is very important. It takes away the problem of Wild West prices. It gives fund managers a standard that can be used to pass safety checks. When you add in the fact that XRP settlement happens almost instantly, you're suddenly talking about a financial system that banks and central banks, not just players, can trust. Atkins hasn't been afraid to talk about the turn shift. He made it clear in his first speech to the SEC that rules should encourage innovation, not push it overseas. That one sentence made waves in the legal offices of businesses. No longer do internal memos say to stay away from XRP. They tell you to do a preliminary risk estimate. And while that's going on in the US, XRP is collecting papers around the world in secret. Pilots for on-demand liquidity are being run by payment companies in Latin America. European banks are making bridges for ISO 2022 that will let XRP work directly with their messaging systems. Asian banks are looking into whether XRP's liquidity hubs can do better than SWIFT channels, which have been around for decades. It's not loud, it follows a plan. Now put the pieces together. Futures on CME, a change in the SEC that supports crypto. Lawsuit deal is getting close. The market for Brazil's spot ETF is clear. Lessening of macro danger. At the government level, there are strategic talks about digital assets. That's more than one cause. That makes a series. Sequences are what make real moves happen. People love to joke that the XRP army has been planning to land on the moon since 2018. Okay, but there are times in every market when the joke really does come true. The Dogecoin did it. It was GameStop. When chances change, stories change too. Don't think you have to go all in. It means to make your view bigger. No longer is crypto just a bunch of talk. It has to do with liquidity lines, compliance, and how well global settlements work. The latest XRP milestones directly hit those metrics. Now think about this thought experiment. If banks put just 0.25% of their $2 trillion pool of alternative assets into XRP after the ETF, that's an extra $5 billion in demand. At the current supply level, that alone makes a big difference in price. Add a real desire for settlement, put in strategic stores, add remittance lanes, and get rid of the useless Nostro accounts. The models start to look mean all of a sudden. This morning, I read through some of my old tweets, videos from the past. I've said many times that XRP would be dull until the case was over. I agree with that take. Up until now, because things are finally becoming clear. And markets don't reward sticking to old ideas. They praise being flexible. So keep an eye on the CME numbers. Keep an eye on how groups grow. Also, understand this. The events going on here are not a spike. It's building a tower. Price tends to follow structures faster than most people think once they are locked in. Most people get this wrong about what's going on. They can't take their eyes off the price chart because the real signal is happening somewhere else. Volume in futures isn't about today's candle. It has to do with permission. It has to do with whether big players can even get close to the product. And that answer is slowly becoming yes for the first time in XRP's history. Think about how asset managers really do their jobs. They don't just choose to love a gift one morning. They start with limits and work backwards. Does it follow rules? Does someone have a rate they use? Do you have a futures market where I can hedge my risk? Can we explain it to compliance? Can we slowly get in without making the market go against us? All of those things are true for CME futures. That's why they are more important than a big price jump. Add what comes next in that chain of events. The future is not a blank slate. They bring in market makers. Market makers make gaps narrower. More volume comes in when spreads are tighter. More volume makes price changes more stable. ETF producers need prices to stay stable in order to make their case, which is why Bitcoin getting an ETF didn't just happen. It was built on years of work on futures that most small buyers didn't pay attention to at the time. XRP is now going down the same path, but it is smaller. Freedom of choice is something else that isn't talked about enough. Futures give institutions the freedom to change. They can protect against spot risk. They can make deals based on relative value. They can be bullish or bearish without putting their security at risk. This makes people more likely to join, even if they aren't completely optimistic yet. In a strange way, that doubt still adds liquidity. And cash flow is the fuel. Let's look at the case one more time, since this is what makes a lot of people feel upset. It's not that demand wasn't there for years that XRP felt stuck. It's because demand couldn't properly be heard on a large scale in the US. When that doubt is gone, there is no longer a gradual shift in the story. You get a snap. Compliance offices don't argue about ideas, they react to being clear. If everything goes smoothly, XRP will go from being a special case to being a candidate for an accepted asset class overnight. That's not just talk. In this way, internal plans work. After that, ETF filings stop being news stories about speculation and start being working schedules. Frameworks are finished by custodians. Authorized people take part. Providers of liquidity step it up. It's not loud, but it keeps going on and on. So let's talk about how supply changes over time, since this is where many surface-level claims fail. When people look at the overall supply of XRP, they quickly rule out any upside without doing the math right. Total supply is not what counts. At the margin, it's liquid availability versus demand. A big chunk of XRP is either locked, kept for a long time, or not usable for trading. New institutional demand doesn't have to buy up all the supply, though. All it needs is to be too much for what's actually for sale. That's how repricing works. Not because everyone buys, but because people who are selling go away. On top of that, utility demand for XRP doesn't act like speculation demand. When institutions use XRP to settle transactions, they don't flip it. They're riding it. That makes a completely different pressure distribution. There will be less churn and panic selling, and flow will be more stable. It's impossible to avoid the global angle at that point. While U.S. authorities argue, adoption keeps moving forward in other countries. Payment routes that cross borders don't care about Twitter arguments. They care about how fast, cheap, and reliable it is. As always, XRP does well on all three. ISO 2022 alignment isn't just a buzzword, it's how things work. And banks don't just take apart something they built around a standard. This is what you see now, convergence. XRP is getting closer than ever to having clear rules, being used by institutions, and being useful in the real world. That's why this time feels different. Not more loud, not the same. Now let's base this on actions, not ideas. Keep an eye on what happens if XRP starts to hold higher lows while the volume of futures keeps going up. In the best way possible, that mix is dangerous. It means accumulation without mental overdosing. It's not the same as a blow-off top, it's a base form below the top. Retail is often slow to respond to these changes. It's not that they're not smart, but because they're taught to respond to price rather than structure. The reverse is true for institutions. The trade is made first, and the price is confirmed later. That's why the beginning is always dull, until all of a sudden they're not. This is not advice about money. This is the part that most people don't think about. When XRP is accepted, it will be able to fight with more than just other cryptocurrencies. It goes up against old methods. Accounts for nostro and vostro, capital stuck, slow settlement. These wasteful actions are very big. Even small amounts of displacement cause too much demand. Not every bank has to use XRP. You need a few main streets to turn. When that happens, other people follow. Not because of a belief, but because they have to. Let us go back to the military point of view of the US for a moment. Even a hint that digital assets other than Bitcoin are being looked at on a national level changes the whole tone of the talk. It means that crypto is no longer seen as a speculative entertainment, but as a part of everyday life. Also, infrastructure items are worth different amounts of money. They learn to wait. They are kept safe. They get bigger. This is why it's not useful to compare XRP's potential move to cycles from the past. The year is not 2017. It's not even 2021 yet. The players are not the same. The reasons are not the same. And finally, the rails are being put in the right place. Does that mean up and up for all time? Of course not. There is still volatility. There are pullbacks. The news changes. The floor does change, though. Things will change in the long run when the floor changes. And what comes next looks more and more like an institution. So here's how you should really think about this going forward. Don't ask if XRP will go to the moon tomorrow. Start to think about what steady adoption in institutions would look like in the next 6 to 18 months. People make very different choices when they ask that question. Watch the volume trends in futures, not the one-day spikes. Be aware of regulatory language, not outrage on Twitter. Look at who is shouting and who is not. That's how you stay ahead of moves that look like they should be easy to see now. Because this is the one pattern that always shows up in market cycles.